Today we take a look at the stock index from Germany, the DAX. The Deutsche Aktienindex consists of 40 companies, and most of them create their business out of the Eurozone, even making it interesting as well from a Forex perspective, because obviously if the exchange rate in the Eurozone changes compared to the US, for example, the market is kind of quite strongly affected. From a technical point of view, the market had moved towards the roughly 25,000 point level fairly recently. And after the strong recovery following up with Donald Trump's tariff question in April 2025, the market had really moved towards higher level. Fundamentally, the European Central Bank as one pillar supports the index and the market as a whole. The interest rate as the time of writing sits at around 2.15%, and that obviously is way lower compared to the interest rate in the US, which actually drives demand towards the Eurozone, and also, despite a rather stronger euro, helps traders and investors alike to get access to a cheap index, as liquidity supply, money supply in the Eurozone is obviously quite high right now. Fundamentally, that's one reason, but fundamentally also the change in the German government has supported the index to some extent, at least potentially, with the election of the new government. The Christian Democratic government is expected to kind of support the economy more than the previous government, and that itself might also kind of support the index. Fundamentally, also corporate earnings have been positive. The recent earnings season points out that companies like SAP, Siemens or Linde, just to name a few, have increased their business models despite the tricky situation in the Eurozone. The war in the Ukraine, unsolved. We have issues across the board anywhere in Europe, but generally the demand and the future outlook remains extremely positive, as the index is currently showing. Whether the market, from a technical point of view, might be able to push beyond the 25,000 point level is a big question. Whether you trade the markets to the up or to the downside is obviously up to what you decide, but either way, in either direction, might make sense from technical point of view. A correction of the index might be quite interesting for you, as then you might be able to get the market cheaper, looking into ETFs, for example, where you could access towards the market in a cheaply manner. So trade and focus on the S&P 500, on the NASDAQ in the US, but also take into consideration whether the DAX and the derivatives of the DAX ETFs could be something worth to balance out your portfolio. So check out the NAGA website for further information in regards to that. Furthermore, in our article, we also checked out what banks have been forecasting. DZ Bank, Berenberg and Deutsche Bank, for example, they quite often had already been outperformed by the performance of the DAX. Most of them have pointed out that the market might rise towards the 22 or 22,500 point level, currently already adjusting their forecast, with the market having moved nearly towards the 25,000 points level. Another positive point for the market would also be the energy price. Oil prices have come down. They are trading below the $67 level currently, and with the war in the Ukraine potentially easing at least slightly, this situation might help the economy in general. If you can get access to cheaper energy, obviously your productivity will rise, and the German economy in general is quite, not labor, but energy intensive. Thinking about the car energy, the metals industry, as well as chemical industry, obviously all has one thing in common: it needs the cheap energy supply. Furthermore, AI forecasts are quite interesting, and they offer interesting alternatives and interesting ideas. To take a look into our forecast, check out what makes sense for you, whether you're interested to buy or sell the market, either in the spot market environment or looking into an ETF.